Who can receive my life insurance policy ownership transfer? Have you ever wondered who can actually receive your life insurance policy when you decide to transfer ownership? This is an important question in the world of estate planning, especially when considering how to manage your assets effectively. Let's break it down in a straightforward way. First off, ownership of a life insurance policy can be transferred to a variety of individuals or entities. This really depends on your goals, the rules set by the insurance company, and some legal factors. One common option is to transfer ownership to individual persons. You might choose a family member like a spouse or an adult child. This can help relieving you of the burden of premium payments or management responsibilities. Interestingly, you can also assign ownership to someone who is not related to you at all. Once the transfer is made, the new owner has full control over the policy. This means they can change beneficiaries, adjust coverage, or even surrender the policy if they wish. Another popular choice is to transfer ownership to a trust. An irrevocable life insurance trust is often used in estate planning. When you do this, the trust becomes both the owner and the beneficiary of the policy. This can be beneficial because it removes the policy from your taxable estate, which might lower estate taxes when you pass away. The trustee will manage the policy, pay premiums, and distribute the proceeds according to the trust's terms. You can also transfer ownership to legal entities like companies or limited liability companies. This is often seen in business succession planning. For instance, if multiple parties share interests in a policy, an LLC can be created to manage it effectively. This helps to avoid conflicts among beneficiaries. Another option is naming a successor owner in the policy. This means that if you pass away, the successor automatically assumes ownership. This is a smart move because it keeps the policy out of the probate process, which can delay distribution and add costs. If no successor owner is named, ownership typically goes to your estate upon your death. This means the policy becomes part of the probate process, which is not ideal if you want to avoid delays. When transferring ownership, there are a few practical considerations to keep in mind. You will need to complete an absolute assignment to formally transfer all ownership rights. Once this is done, you will no longer have any control over the policy. There can also be tax implications to consider. For example, transferring ownership to a spouse may not remove the policy from the taxable estate, while transferring it to an irrevocable trust often does. Lastly, remember that the new owner will take on the responsibility of making premium payments and managing the policy. This can relieving you of administrative burdens. However, transferring ownership means you will no longer have the right to decide who receives the death benefit. In the context of elder law and estate planning, transferring ownership of your life insurance policy can be a strategic way to manage your assets and ensure that the proceeds are distributed according to your wishes. Just be sure to have the proper documentation in place, like assignment forms or trust agreements, to make the transfer legally binding.